Good afternoon. This is Todd Horwitz coming to you from the floor of the CME Group in Chicago. And as we continue to track the U.S. Treasuries, interesting day. We had a very big rally and unfortunately we rallied right into the resistance level. But as we look at the whole story, what do we really have here? You've got a hawkish Fed that is all of a sudden been able to get away with the hawkish talk. You know, typically in the past, the hawkish talk would create an equity sell-off, and of course they would back down, and of course it would really screw up with the bond market, and we'd go bouncing back and forth. In the meantime, we're getting a little bit of a rally into a hawkish Fed, and I think that that's probably a great rally to sell. I think there's probably a little bit of news coming out somewhere that we haven't not quite heard yet. But I mean, at the end of the day, the banks really tell the story. And what we're seeing here is the banks and the equity markets continue to rally higher. With the banks rallying higher, that they're signaling that there's going to be higher interest rates, which would mean lower bond prices, which is why we want to be the seller of rallies and continue to sell these bonds. And I think right here where we are, 153, happens to be probably a pretty solid level to look to be a seller. It does feel like there's some kind of obscure news coming out that might create just a little bit higher pop here in the U.S. Treasuries. But at the end of the day, overall, we're going to start to see higher rates, especially if there's any growth and things starting to happen here. So we look for lower prices. 153 looks like a great spot to start with, and of course, that would go right into the big rally, which we'd like to be a seller of all rallies anyways, and that's the way I see it. This is Todd Horwitz, coming to you from the floor of the CME Group in Chicago.